welcome to another trading day right here in Lagos, Nigeria. I'm Ladi Williams. Here's what's coming up in the next 55 minutes. As MPC delivers jumbo rate hike of 400 basis points, we analyze expected impact as battle to tame inflation intensifies. The Naira extends gain at the Binance P2P exchange as traders quote about 1,415 Naira per dollar. And Kenya gets grey-listed over money laundering. Hello, welcome to the program. Let's get the top stories that set your agenda now. We see the CBN has formalized dollar sales to BDC operators after a 3-year break. The central bank explains that the move is aimed at stabilizing the Naira and narrowing the gap between the official and unofficial exchange rates. According to a statement released, the CBN says it plans to sell $20,000 weekly to each BDC at a rate of about 1,301 Naira to $1. And the BDCs are allowed to sell to end users at a margin not more than 1% above the purchase rate from the CBN. To the oil markets now, see oil prices pull back today as the prospect of delays to U.S. interest rate cuts and raise in U.S. crude stocks offset a boost from potential extension to OPEC Plus supply curbs. You see Brent crude futures there down about 0.36%, $83.35 a barrel. WTI crude, that's the cheaper version there, $78.59 a barrel, down 0.49%. So we're still seeing volatility in this market, but it's to the downside at this time. Well, the world is taking oil for granted because it is abundant, and that's according to the OPEC Secretary General, Haitham Al-Ghais, sending a strong word to the global economy that oil demand will continue to grow despite all the talks around its decline. Mr. Guy says for the reasons around global population and rapid urbanization, which will require 23% more demand for oil and including gas, oil will remain a fundamental cornerstone. The Secretary General spoke to Channel's TV energy correspondent and some select media on several other issues, including concerns around funding of hydrocarbon projects. Take a listen.
The focus is on expanding our dialogue and outreach to consumers around the world. We believe that consuming countries and producing countries must have synergies together. We provide stability, as you mentioned, to the global energy market, oil market, through reliable supplies. We ensure that the supplies are steady and reliable and stable. We make sure that the market is always balanced. Of course, this has an implication for longer-term investment. We try to create an investment-friendly climate. We believe that these investments are absolutely necessary. We will continue to advocate for the continuation of investments in oil, as well as the technologies required to decarbonize our operations. This is ongoing. This has been ongoing for years. We have many projects coming up in many of our member countries that will be coming over into activity in the next couple of years, CCUS projects. And in addition to that, we also advocate for renewables and investing in renewables, and we have member countries that are leaders in this respect, taking strides ahead in investing in solar and nuclear, decarbonize our operations. This is ongoing. This has been ongoing for years. We have many projects coming up in many of our member countries that will be coming over into activity in the next couple of years, CCUS projects. And in addition to that, we also advocate for renewables and investing in renewables, and we have member countries that are leaders in this respect, taking strides ahead in investing in solar, nuclear, wind, and what have you. Therefore, we will continue to advocate for inclusiveness, open door policies. We don't close our doors to dialogue with anybody. We are there to help dialogue because we believe that energy and oil is an important source of economic prosperity for the world, as we have done in the past 64 years or 63 years since OPEC was created. We will continue to foster this attitude and environment in our approach to dealing with energy stability for the way forward.
And experts have been reacting to the central bank's MPC interest rate hike of 400 basis points. One is from the Chief Executive Officer for Center for Promotion of Private Enterprises, as Dr. Muda Yusuf. He believes that MPC's decision to hike interest rates aligns with the conventional central banking practices worldwide, but it fails to reckon with domestic peculiarities. He was a guest on Business Morning earlier today.
Particularly those in the real sector. Because we are concerned at this stage, first about investment, we are concerned about production. Now, those in that space, they're already squeezed. Because even at 32.5% CRR, it was one of the highest you can find anywhere in the world. And that has implications for what you call financial intermediation. Because the whole essence of banking in an economy, primarily and fundamentally, is financial intermediation. And what that means is that the banks have to mobilize resources from the surplus end of the economy to the deficit end of the economy. So if you have a situation where you have not even moved it up to 45%, so that means for every 100 million naira deposit, 45 million will be taken out. On top of that, you have a liquidity ratio of 30%. So 30% of what is left has to be kept in liquid assets. So what is left for lending? Because the way the hike has come across now, particularly the magnitude, I mean, this is huge. This is the biggest, perhaps, in the history of MPC.
All right, there you have it. It's a big jumbo hike there, 400 basis points, raising the lending rate to 22.75%. For the first time in 8 months, and we see the CRR at 45%. We're going to be discussing implications of this for the economy. Joining us now is Professor Joseph Nana, Chief Economist, Development Bank of Nigeria. Joining us from Abuja studio. Great to have you on the show.
Nice to be here, Ladi. How are you doing today?
I'm doing great. But looking at proceedings from yesterday, were you expecting 400 basis points? I know some analysts talked about maybe 200 or 150. Someone even said about 700 basis points, but were you expecting 400?
So essentially, the central bank has hiked rates up to 400 basis points for the obvious reason that they have already communicated. If you recall, the central bank governor had already transparently said that they are going through a monetary strategy phase of inflation targeting, which means that they are going to deploy all their tools to ensure inflation comes down to an appropriate level. I recall the central bank governor may have mentioned 21%, that he plans to see deflation towards the end of the year, in some respect. So regardless of the magnitude of the hike, I sincerely believe that since inflation targeting is the mantra for the central bank and the MPC, the hike was quite expected. 200, 300 was what most analysts assumed it would come out to be, but because we know that the level of inflation in the country at 29.9% is sticky up, core inflation, that's 23.5 thereabout, food inflation 35, that's stubbornly inching upwards. And what goes around these numbers, the endogenous variables as insecurity in the farmland, low production output in terms of the oil production levels, the geopolitical tensions. If you take a look at all these things put together, you can see why the central bank deemed it worthy to hike the rates at that magnitude. Yes, in fact, it is high, and yes, it's probably the highest in central bank and monetary policy committee's history, but notwithstanding, the central bank has already communicated that the name of the game is inflation targeting. And to do so, they will continue to deploy their tools to drive down inflation in the short to medium term. That's the ultimate objective.
And at this point, that means lending rate is really expensive at this point, getting really, really pricey to go to the banks to get a loan at this time. But talk to me, paint a picture of the immediate impact of this and what you see going forward.
Okay, so the immediate impact, the knee-jerk reaction, what we're going to see with the banking system as well as households and micro, small, and medium enterprises is that typically when the monetary policy authorities hike up the rates, especially this magnitude, the commercial banks, the likes, will essentially write to the respective customers to inform them about the new interest rate hike, which would literally be transferred on to current customers. So we can expect the average lending rate to go up at the bare minimum at that magnitude. But my suspicion is that number will probably go to the preferred or best customers, and perhaps other customers who are perceived to be high risk will probably get a much higher rate. So yes, when you inch up the MPC, when the MPC inches up the MPR, what tends to happen there is average lending rates will go up, and you're basically going to sacrifice a degree of economic growth. That's the trade-off we see. When you fight inflation, you hike up rates. When you hike up rates, households, MSMEs will feel the pinch right away because essentially they'll be less likely to get access to credit, or perhaps if they have current credits running, it'll be more expensive for them to conduct businesses and to reinvest. So I suspect that it's going to be a difficult time thereabout for a lot of businesses in the near term. But overall, the objective for the central bank is to bring down inflation. And if price stability is the name of the game, and I think they've done a considerably good job to signal to the markets that, hey, look, we're here to drive down inflation.
And when do you see the impact of this 400 basis point hike? When do you feel the economy will start to feel the impact of this and maybe some kind of reaction to inflation?
So I think the knee-jerk impact would be, as I've earlier mentioned, banks will probably begin to write to their customers, transferring that interest rate hike to their respective running loans. So I expect that to happen almost automatically. But in the near term, I also expect that there will be a drag on economic growth. If you remember this, the central bank governor said one thing yesterday that stuck out to me, that the IMF has said growth is going to be around a 3% growth. The central bank has said it's going to be around 3.3% growth. The federal government said it's going to be around 3.8% growth. So they're essentially bringing down the projections because they know the magnitude of the hikes that's going to cause a drag on economic growth. So I think by and large, in the medium term, in the short run, we will see a sluggish economic environment because of the capital will be less deployed. But overall, like I said earlier, if the name of the game is to bring down inflation, the monetary policy authorities have done the right thing.
And I'm wondering if we're going to see some kind of reduction, in inflation rate going forward with this, or maybe we need a combination of more 400 basis points coming before we can see it impact inflation. But talk to me about the cash reserve ratio at 45%. Paint a picture of the expected impact of this.
So the cash reserve ratio, or the CRR, debits to banks, which is now at 45%. The previous figure was 32.5, thereabout. I expect if commercial banks aren't screaming right now to the high heavens that this is too much, it implies that it might not be too much. But I sincerely believe, though, that 45% is a way to showcase that there is excess liquidity in the system. And if there's excess liquidity in the system, then that's a way to sequester these funds to ensure that they're pulling out the liquidity to remove the inflationary pressure that the liquidity or the money supply has caused over time. I saw a Nairametrics publication where it showed the money supply 3 jumping all the way to 70-something trillion naira from last year's 50-something December's numbers. So if we're saying that money supply or M3 is very high, then the central bank will essentially do whatever it takes to bring it back to manageable levels. But regrettably, the central bank alone cannot solve the problem. That's why the central bank pointed out clearly that it takes the fiscal side as well to coordinate their affairs with the monetary side. Consequently, I feel as though when you look at the level of liquidity coming in from the fiscal side, the monetary side will have to now work closely with the fiscal side to ensure they mop up any remnants, if you will, of liquidity that they deem to be excess. That is why I suspect 45% was the sweet spot. But it is the maintenance period of the money, the CRR, that I want to actually figure out. Because the maintenance period could be a couple of days to a couple of weeks and so on. That will essentially let us know the efficacy or how well the CRR and the monetary tool raised to from 32.5 to 45% is actually effective. So that's what we have to watch over time. But to be sure, the CRR is hiked really, this is a significant jump, but as I've earlier said, the price stability is the name of the game. And if that's the case, then we should expect that the inflation level should come down and we should get some level of equilibrium in terms of money supply of what the central bank would like to see going forward.
Right, and before now, we've heard complaints about customers not able to get enough cash, when they go to the banks or the ATMs, and having to resort to POS operators to get money. So I'm wondering, with this 45% hike there for CRR, that means customers might not be able to find cash at all, when they go to the banks at this time, because I know that's supposed to impact more of credit, but it seems it might also impact getting cash.
Well, perhaps, but I look at it from the lens of we're supposed to be pivoting towards a cashless policy, a cashless society, so we should be using less cash, as it were. So in my estimation, a lot of folks these days have OPay accounts or have money point accounts and what have you. So I suspect that even though the CRR may have been hiked, in the end, there will still be cash available for the customers who require cash. But beyond the cash requirement, I would suspect that the idea here is to be using more of your debit cards and payment systems to conduct transactions. That way we can actually increase the financial inclusion levels and so on.
Yeah, and I hope they can also update those platforms so we don't have network issues and we can just transfer money and actually it goes immediately when you're using some of these apps going forward. But we know the governor reiterated the stance of the CBN on interventions. Interventions are gone, at this point. What's your take on this?
I think that's a welcome news. That's good. Because the central bank historically has been an operator with intervention funds as well as a regulator. And that poses a challenge to their mandate of price stability, because once you do that, it creates a degree of price distortion. Consequently, the central bank governor pointing out that they're out of the intervention fund environment is ultimately a good thing. Let the operators, the DFIs, the commercial banks, the microfinance banks, the finance houses and the likes, let them do the intermediation, let them create the risk assets, let them create the loans and so on and so forth. And the CBN can reposition themselves as a fulcrum for price stability and essentially a banker of last resort to the federal government.
All right, and definitely the central bank governor did say inflation will remain high. That's high inflation remains sticky for a while, but at some point we'll see it come down. What can be done for some kind of short-term relief?
Well, short-term relief can be done on the fiscal side because the monetary side has done their bit by hiking up rates and by increasing the CRR and, of course, adjusting the asymmetric corridor. So that has been trashed out. Now, what needs to occur right now is on the fiscal side for food inflation particularly, because food inflation seems to be the sticky point here. It continues to inch upwards, and that's because of the price of goods and the exchange rate, and more importantly, the geopolitical tensions. So if you take a look at the MBS report, the number 1 and 2 items that sticks out is bread and cereal. And these two components have been alarmingly high in the past few months. So in my mind, what needs to occur is the federal government should support the system broadly by perhaps releasing the strategic reserves of grain. That's on the one hand. And on the other hand, if there's still the heightened level of insecurity in the farmlands, then the tools should be deployed to mitigate the risk of crops being destroyed and farmers being too scared to go back to their farmlands and so on. So those are the 1 and 2 examples I can give in terms of immediate remediations to cure inflationary pressures, especially when it comes to food.
All right, definitely let the farmers go back to the farm at this point. Thank you so much. Great having your perspective, Professor Joseph Nana, Chief Economist, Development Bank of Nigeria. Thank you.
Thank you for having me.
All right, after the break, we head to the markets. Just stay with us. All right, let's get a check of what's happening in Europe now. It's a sneaker sale that you don't see any day. Germany's Adidas has dropped another load of Yeezy sneakers. They're highly sought by collectors, but the company can't wait to just get rid of them. At this point, joining us is Lars Halter now to give us details. Great to have you, Lars. So why is Adidas in a hurry to sell their shoes?
Thanks for having me, Ladi. So these Yeezy sneakers are part of a line that Adidas developed and marketed with rapper Kanye West. It was one of the most expensive corporations in the world of fashion, but it went sour last year after Kanye made some anti-Semitic remarks on social media. Now, as much as any anti-Semitic comments should not be tolerated anywhere, it is especially tricky in Germany with the country's history, the Nazi regime leading to World War II, the Holocaust, which of course killed 6 million Jews. There is an absolute zero tolerance policy here. So Adidas broke its deal with Kanye and of course regretted the circumstances that had led to that. CEO Björn Gulden even said that he thought Kanye didn't even mean what he said. Anyway, zero tolerance, as I said. Now Adidas suddenly had over 1 billion euros worth of unsold shoes in storage, and initially the company planned to destroy them. The problem, that is about as unpopular a move as you can pull at a time when fast fashion trends lead to millions of tons of clothes being thrown away every year, all while we are seeing rising levels of poverty around the world.
And I'm wondering, what does Kanye have to say about all this?
Well, apparently he's not too happy about it either. First of all, he's obviously not getting paid for any of this, so there's several millions that are not coming his way. Add to that the fact that Adidas is actually suing Kanye for 250 million for breach of contract on his part. Anyway, for Adidas, none of this is much of a concern. They want to put this chapter behind them for good reason, and they're getting closer to that goal. Last year, 2 initial shoe drops brought in around 700 million in revenue, and those last couple of pairs now are set to bring in another 250 million. For Adidas, it's all about unloading the merchandise at cost, so without making a profit, and they're doing it online with not too much attention, being paid to the entire transaction. Any profit that they might be making in the end, Adidas has pledged to pass it on to non-for-profit organizations that are fighting racism and anti-Semitism.
All right, what are investors looking at in today's markets?
We're looking at some weakness out of Asia. It's on a day, though, where lots can change because we're expecting some economic figures due later in the day, as well as a round of comments from U.S. Federal Reserve officials. They could offer fresh insights into the U.S. Central Bank's rate cut outlook. Expectations are at this point that those rate cuts investors had been hoping for a long time now won't actually materialize until later this year. That is, as inflation data has come in hot and policymakers have indicated that they need to see more signs that inflation is moving downward a little bit closer towards their 2.0% goal.
Last halter right there in Berlin, giving us the details from Europe, and see the markets and the shoe market right there in Europe. And definitely after that jumbo rate hike yesterday, the market's definitely going to react, and we're already seeing such reactions at this time. And we have Ini to bring us the details on what the markets are saying, how investors are reacting to this jumbo 400 basis points.
Yeah, you say jumbo.
Jumbo.
Well,
That's
I guess we're expecting it, Laddie, even though it's more than
more than expected.
A lot.
Right.
No, but we had a guest yesterday who said 700.
He's the only one I heard that from.
He was closer to the truth than a lot of us.
Yeah, he was the closest.
Exactly. Anyway, let's see what the market is looking like at this time. I have to tell you, the NGX is receiving a very big blow, building from yesterday's negative trade. It's down 0.83% intraday. So I just wonder, and I don't know, I feel like crying actually, because I was so connected to that 100,000 points. Now we see we've lost that. We had 99,743.19. South Africa is also in the red, 1.17%. That's 72,288.19. Looks really red. Looks really red there for Africa. But let's see for the EJX. Gives us a little bit of breather right there. It's up 1.45%. But Kenya is down again, 0.55% in the red. Still talking about the NGX, so we saw that result from Nestle PLC. They've reported a loss before tax of 104 billion for the year ended 2023. That's to profit before tax of 71 billion. Same time upper year, that's 2022. And this is on the website, the NGX website. The company reported foreign exchange losses again. And this is even when the rates were not this bad, talking about the naira to the dollar. So I wonder what will happen to companies. We could count how many companies, multinationals, left the country last year because of foreign exchange losses. Even some companies in the country actually recorded foreign exchange. I think only the banks benefited from that, and we do hope this stabilizes really soon. We hope that the policies and the efforts of the government, of the Central Bank of Nigeria especially, yields fruit, because we cannot afford the unemployment that will come with losses such as this that we see in Nestle. Well, still staying with Nigeria now, let's go to the fixed income space and see how reactions have been trailing that 400 basis point. That's about 4% increase in the lending rate. And what that's doing, this is an aggressive effort, obviously, to mop up supplies, currency in supply by the central bank, inevitably by the country, by the federal government. Well, let's have to discuss what's been going on in the market with Demola Oshuntoki. He's a fixed income dealer with Access Bank. Hi, Demola. Good afternoon.
Good afternoon. Thanks for having me.
Great. So it's not yet 24 hours since we had that rate hike. Very aggressive, very tight right there. Has the market been reacting today?
I think, as you said, we've seen quite an aggressive hike, moving by 400 basis points. I think this is the highest that we've seen, especially in recent years. But I think this was what was expected within the market. So if we look at the previous day, we already saw a number of these, even on the bills and bond side, trading just above the previous MPR, which is 18.75%. We saw them trade at about 19%. So this was already factored in terms of there was an expectation regarding the market in terms of what this hike was going to be. There were some chatters around anywhere from 200 to 500. So with the rate hike of about 400, it was within the expectations of what was of what we expected. So essentially, all of this had been factored in, and we're not seeing any cause for concern within the markets or any kind of panic selling at the moment. So I think all of this had already been factored in.
So we had a quiet market Monday, Tuesday. Is the market still quiet now that the decision is out there?
Yeah, so what we're seeing now is, I think, because the expectation was that there was going to be a rate hike, I think taking the words of what the CBN governor said, there was an expectation, and this was essentially the only direction to go, where we had inflation increased by about 7% from June last year to date. So there was only one way, which was to increase the rate in a drive to further control this inflation. So as a result of that, like we've not seen any cause for concern within the markets, as people had already factored this in. So these bonds as well as bills were kind of already trading above MPR, especially within the bills market, where we saw the long end trade at about 19% yesterday, and this is still the case today.
So we see that the second quarter auction calendar is out. We have an auction next week. That'll be the first for March. And we also hear that foreign investors have started trickling in. How much of that do we have, and what are the expectations as we look forward to next week's auction?
Yeah, so next week we have about 300 billion that is going to be offered at the NTB auction. And the implication of that is, what we're expecting is we'll see if the CBN will work proactively with the DMO as well to upsize. You know that the last NTB auction, there was about 256 billion that was offered. We saw them work proactively again to offer about 1.5 trillion in advance of that. So what we saw is we saw them maintain rates at about 19%. 19% was maintained around the 364-day paper. And for this bond, we're waiting to see if they would continue that trend of maintaining that 19%, or if we could even see an increase in terms of a higher stock rate, which would resultantly mean a higher yield for FPI investors. We know that, especially within the coming months, what we've seen as a result of the elevated levels within the NTB auction is we've seen further traction from especially the FPIs who are looking to play within this space, as they're looking to get some good returns on their investment. At 90%, that's about 23% yield. So a good return for a number of foreign portfolio investors.
Yeah, but I mean, some economists are saying that the yield is still not enough to cover up the inflation rate. So that would be a negative for investors, especially the foreign investors. Do you see that playing out?
So I think you're right. At 23% yield, it's still negative for returns, but I think I would look at it from a different approach, which is for FPIs, what they're looking at is a good return on their investments. And by increasing the hike by 400 basis points, again, we wait to see if they would maintain that stop rate of 19%, or if they would increase that. But currently, it's still giving relatively good returns on their markets, for a lot of FPIs. And further down the line, what we want to have is a lot of FDIs play within this space. What they're looking at is, one, good returns on their investments, but two, also confidence within the market. And I think that confidence, we have seen that trickling in terms of the CBN governor. He's been consistent in his approach since he's come into office, which is increasing the rates. And aside from that, I think he's taken a rather bold decision, but he's been simple and clear in terms of what the objectives were in terms of taking this decision. So essentially, he's looking to do two things. First is to resolve the inflation. Aside from curbing inflation, what he's also looking to do is provide a certain level of stability within the FX market. And I think these are further things that would enhance the mindset of a lot of foreign portfolio investors in terms of looking at Nigeria as a viable space, for a lot of investments. And we're expecting to see a lot more increased flows, especially within the FX market. So I think, what we're looking to do now, what he's looking to do with this drive, is essentially make Nigeria a viable space for a number of investments, which is what we're seeing. So essentially, as a foreign portfolio investor, you have the choice of looking to invest in Nigerian securities, as you're going to get, much better returns than probably what you see in more developed markets.
All right. Thank you so much for that. Demola Oshitoki, fixed income dealer with Access Bank.
Thanks for having me.
All right, let's go through the rest of the market now. We go to the Middle East, leaving Nigeria now. Abu Dhabi is in the red, 0.21% at intraday, 9,267.85 Dubai. You see, however, on the flip side, 0.35%, and that's up to 4,287.31. Saudi Arabia goes back to the red, 0.21%, and Qatar is also in the red, slightly, though, 0.09% at intraday. We move over to the United States there to see what's going on with that market. Features were lower as investors are with fresh inflation data in the United States. A stock feature sticks lower. Investors look ahead to that, and we see that the Dow Jones features was in at 0.31% at 38,894. S&P features in the same range. And then NASDAQ also is also in the same range, even though more, 0.46% at intraday. In after hours trading, online marketplace eBay jumped about 3% after announcing that it was raising its quarterly dividend and would spend an additional $2 billion on buybacks. Talk about news that moved the market now. But let's take a little bit of some steps back and see how Tuesday's trade closed with our correspondent in Washington, Maria Bird.
The U.S. stock market had a mixed day on Tuesday as the Dow Jones was down at 0.3%, the S&P 500 up at 0.2%, and the heavy tech NASDAQ also saw an upward swing of 0.4%. Many investors are watching to see what the retail industry says and awaiting the inflation report, as the U.S. economy has been a bit mixed and wanting to see what will happen next, as we've seen quite a bit of a spike in the tech industry, and also Bitcoins have also shown some strength through the U.S. economy. But investors are still watching, as we saw an upward swing last week. This week is showing some mixed signs for the U.S. stock market.
Oh, thank you, Maria. Now, let's look at Asia. What's going on there? That market is closed, obviously, because of the difference in hours. Asia-Pacific stocks were mostly down on Wednesday as New Zealand's central bank kept its rates steady, while Hong Kong scrapped rules to tighten its property market at its budget announcement. The Nikkei is still on 39,000, but it's in the red, 0.08%. Kospi recovered 1.04%, 2,652.29. Hang Seng is deeply in the red, 1.51%. Looking at other markets over there in Asia, we can see that Shanghai is in the red as well as in Australia. Australia is looking, well, not too bad, very marginal, there's 0.03%, but Shanghai is really hard hit, right? They're almost 2% in the red. So those are the markets for intraday and the closing numbers for Asia. Ladi, back to you. But I mean, it's heartbreaking to see that the NGX has lost that 100,000 level. We have to struggle again to get back. I don't know if this is a good encouragement for investors who've been waiting along the line to, jump on the market. Yeah. I don't know if it's a good one.
I always advise, buy on pullbacks, but at the end of the day, you don't want to catch a falling knife. So you have to make an investment decision at this point. And
better still, consult a professional.
Get a professional. Always get a professional.
Money is very hard to come by this day.
Yeah, tell me about it. When last did you experience stable prices? I don't even remember what that feels like at this point.
Not in Nigeria, yeah?
Yeah, I don't remember.
We'll get back to you, don't worry.
Hopefully. Thank you so much, Jenny,
All right, thank you.
Details there. All right, let's take it on to the UK now. We have Juliana join us from our London studio. Great to have you, Juliana. Let's look at the banking industry there. We see members of parliament have expressed worries regarding how major banks are treating small businesses in the UK following revelations that 140,000 accounts were closed by lenders in the last 12 months.
Good afternoon, Lady. Yeah, this is a really interesting story, actually, and it's part of, I think, a much wider discussion about banks and how they come to a decision to debank people. I think the most famous case, of course, was about the former UKIP leader, Sir Nigel Farage. He's not a Sir, actually, Nigel Farage, who was debanked by the late Her Majesty the Queen's Bank, Coutts, by the former CEO of NatWest, Alison Rose, that opened up a firestorm of inquiries about people who do feel they're being mistreated, which is why the Treasury Select Committee have conducted this pretty robust investigation where they have released data, which you've just outlined, showing that in the past 12 months, about 140,000 business accounts, I think it's worth pointing that out, have been closed down for a variety of different reasons. Now, there are over 5 million business accounts in the UK, so if you actually look closer into the numbers, I think this only represents about 2%, but it's still alarming, particularly because MPs want banks to start showing the reasons why they're deciding to do this. It appears as if we go back to the famous case of Nigel Farage, it was purely because he had differing political views to that of those who were who he was banking with, which of course is totally unethical. So I think the Treasury Committee want to ensure that going forward, banks are properly recording the reasons why, and they are putting down exactly where these individuals are from. We know, of course, it can be really difficult for people of colour, particularly blacks, to get business banks and business loans here in the UK. So they want to tick that box. Now, the Economic Secretary to the Treasury, who actually is a British Nigerian Conservative MP, Bim Afolabi, he is going to be speaking on behalf of the government later today when this probe takes place. But pretty interesting, and of course it involves all the major banks. I think there are 8 banks, including the big 4, Barclays, NatWest, HSBC and Santander. So it's going to be very interesting information, particularly if, you know, your bank has been closed purely because the banker may not like your business idea.
All right, I guess let's hope some of those businesses get rebanked at this time. Let's look at the car industry now. See, Jaguar Land Rover has confirmed the future site for the UK's biggest electric vehicle battery manufacturing facility. That's been confirmed, expected to create about 4,000 jobs. That's good news.
Oh, yeah, this is really good news as we are in, of course, election year. And we have had so many issues when it comes to car manufacturing in the UK. It kind of was halted, or should we say disrupted, during COVID-19. And it is still struggling to recover, particularly because we know that electric vehicles is the way forward. We were supposed to ban the sale of petrol and diesel cars in the UK by 2030. The Prime Minister has pushed that back to 2035, but it's still a massive incentive for car makers like Jaguar Land Rover to jump in and start building electric gigawatt factories, or should I say battery factories, which is exactly what has been announced today. It seems as if there is a 3-way partnership, but Jaguar Land Rover and Tata, which is that Indian conglomerate, they are still very much involved. And as you said this morning, they have announced that they are going forward with building this huge gigafactory site in Somerset, an area in England that could really do with this sort of state-of-the-art facility. Now, it's not going to be up and running, I believe, until 2026, but as you said, it's going to create 4,000 jobs. This is a boon for the British economy, which is in a shallow recession at the moment. Of course, we know that we need to, dig in to a lot of these tech reforms, and this potential factory will do it. In fact, according to bosses this morning, they said that when it does open, it is going to be able to supply more than 50% of the UK economy's electric battery requirement, which is good because, of course, we don't want to constantly be importing our batteries from China. So, yeah, good news. Good for car manufacturers, and, of course, good for the Chancellor as he is going to be announcing his spring budget next week.
Oh, definitely a big deal there. You don't have to import EV batteries, at this point, because that's going to be a very expensive import. But how are the markets looking in the UK?
don't have the specific market data here with me, but the FTSE 100 was trading down the last time I had a look, Laddie, and there are a myriad of issues for that. I spoke to you yesterday about the death of Lord Jacob Rothschild, the billionaire banker, philanthropist, and founder of St. James's Place, which is one of the biggest investment firms in the UK, a huge firm on the FTSE 100. Their shares have plummeted this morning. I think it's likely to do with the fact that a Rothschild has died. So that is that issue there. I think the pound is trading up against the US dollar. £1 at intraday will get you $1.26, Laddie.
Right, good news for the pound there, I guess, for the trading day. Thank you so much, Juliana. All right, let's take a look at some stories now. See, Kenya has found itself a Financial Action Task Force grey list for the second time over money laundering and terrorist financing. The FATF grey listing refers to jurisdictions under which a member country is put under enhanced monitoring to address strategic deficiencies in its counter-money laundering, terrorism financing, and weapons of mass destruction action plan. Experts say the Kenya stands a chance to be moved from the grey list to the white list should it harness its technological potential. And the South African government taxes make up about 27% of petrol price charge at the pump and just over 28% of the price of diesel. The finance minister revealed this in a full budget review following his speech outlining the government's spending plans for the next financial year. In a speech, he offered some relief to motorists by not increasing the general fuel levy for the 2024-2025 financial year. Take a listen.
Despite economic pressures, Finance Minister Enoch Godongwana chose not to increase the general fuel levy or the road accident fund for the upcoming 2024-2025 financial year. However, amidst these announcements, concerns loom large for some motorists. Some are telling me that they're already struggling to cope with the financial burden of high fuel prices.
We really can't. I don't know when this is going to end. I don't know how it's going to end. But, I mean, the government must come up with something because we can't take it anymore. It also affects, I mean, the amount that we use to buy food. It's no longer the same. You walk into a store, a price of bread is now 21 rand something. And then we used to buy bread maybe with 14 rand something. I mean, I went to a store the other day just to buy a toothpaste, which cost 39 rand. I used to paid 11.99 rand in the past, so I don't know how it's going to end.
For some, the prospect of another petrol hike is daunting and may push their budget to the breaking point.
It is challenging because, you know, with 200 rands, years back, you could move for quite a distance. But now with 400 rands, it's only rounds around the vicinity you can't even go for. Yeah. Fewer hikes, definitely we can't afford. As much as we would want things to be in order in our country for everything, for everyone to survive. But with these situations for fuel, it's just hectic. It's just too much.
You know, enough is enough. Every time you fill up your tank, you're hit with soaring petrol prices, leaving less in your pocket for essentials. I think it's time for the government to prioritize the well-being of its citizens.
As South Africans navigate the complexities of fuel prices and taxation, the government's decisions carry significant implication for motorists, budgets, and the overall economy. How these measures will impact everyday commuters and businesses remains to be seen. From Johannesburg, South Africa, Innocent Samosa, Channels Television News.
Crypto market now, we see Bitcoin on fire and we see green on the screen. Just little pockets of red at this point as Bitcoin starts to move, looking like it wants to challenge that $60,000 level for the price of Bitcoin. Ethereum sitting comfortably above the $3,000 level, $3,350. BNB also holding up there above the $400 level. So we're seeing green all over at this point in the crypto market, looking really, really bullish. Let's look at the sentiment quickly now. I'm sure it's extremely greedy at this point. Yep, there you have it. I think this should be in green at this point. Extreme greed is what we're seeing in the market, 82 points. And you know how some traders like to use the fear greed index. When the market is really greedy, they try to scale out. And when it's fearful, that's when they try to get in. So use that as you please. Let's look at the top headlines now. Definitely we're seeing the governor of the Central Bank of Nigeria saying that about $26 billion has passed through Binance in 1 year. And he's described this as illicit financial flows at this point. Also, we're seeing Bitcoin hitting that $59,000 level. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Great to have you.
Good afternoon, Ladi.
Yeah, so, you did hear what the central bank governor said about the amount of money, a lot of dollars has passed through Binance out of Nigeria. And I'm wondering, $26 billion, are we talking USDT here or hard dollars?
I think there's something we need to really understand. Stable coins are a peg 1:1 to the US dollar, but they are not the US dollar, right? So it's a crypto equivalent of it. So for adventure, it should be best referred to as the USDT thereabouts from the USDC from SECO. But again, I get really worried because Binance, it's not registered in Nigeria. So for such transactions to go through, it calls for some due diligence. We as a country, the financial authorities need to really check a lot of these things. And I listened keenly to what the central bank chief actually said. I don't know where he got those data. I'm not going to fault it, but I think Binance is a centralized exchange platform. We can get an accurate amount of those data by going to on-chain analysis. Yeah, on-chain analysis can give us a whole lot of those data. And not just Binance for now, because Binance is in the news. Some other platforms can be rejoicing using that to gain some market shares. There are a lot of exchange platforms in this country that are exploiting the loopholes in our system, and they are floating their products. Just some days ago, we heard about Strike Africa, one of the platforms in the US, launching in Africa. Same day, this whole Binance discussion and the CBN governor speech came up. It is so not fair. We have very smart people. What some of these companies need to be doing is to collaborate with locals here that have this already working and see how they could do better, or probably invest in existing business rather than exploit some of the loopholes in our system and make those money or make those gains and take it away. So it appears to be more like some form of colonialism coming up with digital technology, which I don't buy.
Yeah, but Rumi, I guess no one was expecting the central bank would actually be positive towards crypto. We know there's no central bank right now that's happy about crypto, if you know what I mean. But looking at things generally, I know most of these exchanges have strong KYC. Can there be some kind of partnership here with most of these governments?
Yes, I think some of the things that are happening here in Nigeria now cannot even find their way to countries like the US. I think South Africa is also doing very well with that. I think your question also comes close to the fact that the CBN governor said there's some persons that the people doing transactions are not known. I don't think that's correct because on the Binance platform, from my research, it shows that you need to have certain requirements, your email, your phone numbers, and your NIN or BVN thereabout from all of these platforms. So for adventure, we need to go back to revisit all of that for us to get those data correctly. So these are KYCs being done. I don't think that there are although they could be, but I don't know of any other platforms that do transactions in Nigeria that are not KYC compliant, because that amounts to all of the illegalities. But I must say this right now. I have some fears, and I have to say it. The CBN actions right about now for cryptocurrency, considering the fact that there was an earlier circular that actually said there could be some form of regulations that give SEC the right to do a few of them. It's scary to me right now that the space is going to fall back to what it used to be in 2021, where there was no clarity. And in all of these, the black market is going to be empowered. What I mean by that is talking about national security right about now. People are going to be using the back doors to do transactions away from, if they think the exchange platforms are really being scrutinized by government, which I think is not good for our economy. It's not good for our country as well, for probably financing of illicit activities, terrorism financing, and money laundering. So we need to put our house in order, to put regulations straight in collaborations with all of these exchange platforms or all of these crypto provider platforms.
All right, thank you so much, Rumi Ofi. Always great having your perspective. Thank you.
Thank you, Larry.
All right, let's exactly hear what the CBN governor said about the amount of funds that's flowed through Binance in just 1 year.
We are concerned that certain practices go on that indicate illicit flows going through a number of these entities, and suspicious flows at best. In the case of Binance, in the last 1 year alone, $26 billion has passed through Binance Nigeria from sources and users who we cannot adequately identify.
So hopefully we can hear from most of these exchanges, because they do collect KYC. Let's find out what they do with all of that data. Well, with that, that's the end of the show today. Thank you for watching. Remember, you can visit channelscv.com for more updates. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.